Hello and welcome to Charting the Markets. You're with me, Sean Murison, Senior Market Analyst at IG South Africa. On today's economic calendar, we do have that all-important core PCE index data, so another measure of inflation, and obviously a key measure of inflation for the Federal Reserve, perhaps more important than that CPI data. So markets will be watching that, and we do see markets trading a little bit tentatively and cautiously ahead of that, almost waiting for that data to come out before we move. We also do have that weekly unemployment claims data out more or less the same time. Let's look at some charts, and starting off with the US dollar basket, the US dollar index. So we do have that short to medium term uptrend that has come in place. That's following that inverse head and shoulders pattern. Now that really hit a high at that 104.70, and we had a nice reversal, and the price has started to pull back. Now, we have noted that that pullback looks a little bit slow and weak, and suggesting that momentum is still to the upside and taking the form of that flag formation, which just highlighted that in that blue channel. Now, technically, we have had a breakout of that level, which is suggesting that that trend is starting to continue, although I would argue that there's no momentum in that move just yet. And perhaps we'd see some momentum depending on what we get with that inflation figure coming out a little bit later. If that inflation figure is worse than expected, could expect that dollar to start strengthening again, and that would put this pattern into play. Now, traders who are long into that move might consider having a stop loss on the close below that 103.20 mark, alternatively that 102.70. That's depending on your threshold for risk. If stop is wider, generally like to take a smaller position. If it's closer, you might want to take a bigger position. Really up to you, but you could do both, have a wider stop loss and take the same amount of risk, just obviously by using a smaller position. Euro dollar, very, very similar picture. We've had this trend line break, but it does look like this could be a flag. So it's a bit of a rally into from this downtrend. So as a function of that downtrend, so bear flag, the inverse of the bull flag, which we saw. And we have had a bit of a false break there, and the price again just idling by. And so what we are waiting to see is that how that market reacts to the inflation data, just to set that ball in motion and to see whether this pattern does start to play out or not. I think if you are On the short side, you want to see this candle start to go red, maybe move below that 200-day simple moving average. You can target and move lower. We've got a lower support level there at 107.55, possibly even 107, 1.077 odd if you're being a little bit more conservative. If you are a bull, you could also view this as a trend line break and the first pullback since that breakout. And so maybe waiting for that price to move, to settle, and then looking for just a tick back off one of those support levels before looking for long entry. But I think long entry from current might be a little bit tricky because we do have that flag break, and that does suggest some short-term downside to come. But one way of playing that out, one way of approaching that is to wait out short-term weakness if it does occur, and then waiting for that weakness to end with just a bullish candlestick pattern, and then looking for long entry there. All right, looking at cable. We're also sitting a bit in no man's land. That price, that short to medium term trend direction is non-directional. It is range bound in nature. In previous weeks, we thought we were breaking out, but we just extended that range because the price hasn't shown any commitment to a direction. At the moment, it is finding resistance on that 1.2680 mark, more or less a midpoint, slightly above that midpoint of that range. It's proving to be a little bit irrelevant level at this point in time. Tried to reverse off of that yesterday, and that price got rejected, the lowest pushback up. Again, waiting for direction. We will see that direction where we think into the afternoon. I think if you are looking for long entry, then maybe you want to see a close above that midway point, a strong close above that 1.2680 mark before we start targeting and move up to that 1.2800 mark. Now, in that situation, if we do have that strong close, we could look at having a stop loss either below a one-day low. We could use the body of that closing low at 1.266 odd while in search for that move. If we do start to see that move in your favor, then you could start ratcheting up that stop loss level, trailing it with that. Now, if we don't get a break and we see some downside, well, then the inverse applies. That would imply a worse than expected inflation figure. We start looking for these lower levels, certainly a retest of this low at 1.262. In that situation, if we start moving lower, we'd consider a short position having a stop loss above that 1.2680 mark while in search for, well, just yesterday's low as that initial target, but certainly further down, 1.258 would be that next level, and lower support coming in at 1.2595. Moving over to some indices. Starting off with the Nasdaq 100, US Tech 100. Now that long-term trend is up. Generative AI has been supporting earnings, which has helped boost tech, and a lot of that's also helped boost the S&P over the short term, or more short to medium term and long term. And the outlook being quite positive as well. And that set that trend for these indices higher, US indices in particular. You can see that we are consolidating at highs right now, but the long-term trend and the trend bias is up. So we're still looking at keeping a long bias to trades on that NASDAQ 100. Now, when we looked last, we looked at this bullish reversal, that trend line support. We were targeting a retest of that high. That did happen quite aggressively. We've consolidated there. Now, we would look for long entry again. One is either on a break, close above that 18.050 mark, or in the event of a pullback, waiting for that pullback to end. Price just to tick back with a bullish candlestick pattern, a bullish reversal pattern, in which case we start targeting the 18.050 high. And if we get a close above that again, we start looking at, well, we've just added, while we move into new high territory, we're using this trend line as a target. And currently that suggestion is a target of about 18,700. Even if we were to break the support level, still be prepared to sit and wait out weakness and look to see where that bullish reversal does come into play before finding a long entry. You can see there's quite a lot of daylight between the price and that 200-day simple moving average, which is a blue line on the chart. So that's a suggestion that the long-term trend is still firmly up. S&P picture similar, but not exactly the same. We moved into new high territory. We had this triangle pattern or a pennant pattern. This pattern was just a suggestion that that preceding trend was setting up to continue, and it has started to continue. We've pushed to that trend line resistance at that red line at 5,115 mark, and since then we've started to retrace. We can see that there hasn't been any enthusiasm on the sell side there. The price is just grinding lower out of overbought territory, and of course, index can move out of overbought territory just by consolidating, moving sideways. So it doesn't mean it has to come down, but certainly for long entry, if there is a pullback, we're looking to find long entry into pullback in line with that longer term uptrend. Not looking at shorting or looking at picking tops in the market at this stage. Alternatively, buying into a pullback or waiting for a breakout. Again, where would a breakout be considered? And that's a move above this recent high, which is actually just short of that 15115 resistance level. It's sitting about 5,110 odd. So close above there. And we have a longer term upside target currently projected about 5,270 on that S&P 500. Now the DAX 40 or Germany 40, bit of a trickier one to find entry into it. It's been quite aggressive. We had our breakout out of this range breakout here. The long-term trend is up. So again, another situation where we're looking at joining that long-term trend and not looking to pick tops at this stage, even though we are looking overbought. For me, that overbought signal is rather just it's against the trend. So that overbought signal is, hey, well, maybe we can get this at a better price instead of waiting for a pullback. We've used Fibonacci levels there to predict upside targets, further upside targets. That next one being 17,830 odd. But certainly, you're not already in it. If you are in it, you'd be looking at trailing a stop below a one-day low. If you're not already in it, for me, it's waiting for a pullback from that high. Now, as a swing trader, I do like to buy every first pullback from each new high. So yes, we could consolidate, or yes, we can pull back. But for me, it's not really betting on that or taking a view that, or taking a short position. For me, it's waiting for that weakness to play out just to see where it ends. And that first level of support we're looking at there is about 17,360. If we were to break below that, still wouldn't be looking at shorting. We'd be looking at our next level of support, 17,065 as a possible entry opportunity for the DAX. A very different picture on the FTSE 100. Although this picture has been similar for quite a while in terms of range-bound price environment, not a trending environment like we saw on the US indices and on the DAX. This is a situation where we look to trade between levels. Our last signal that we saw was this bearish price reversal. I've just circled black at the top here, off that 7,745 resistance level. Now that reversal has come from overbought territory, and we have seen now a bit of a decline. We've traded through that initial low. We have actually closed below that low. We added a more conservative target there of 7,560 as that next level. And our initial stop loss would have been a close, or it was a close when we talked about it last, above that 7,745. I think as you start moving, see the market moving in your favor, you could be trailing that stop loss. Right now, if you put it above a one-day high, perhaps a little bit too far away, relatively speaking. I think for a suggested stop loss for me at this situation would be about 7,660 on that, but still favoring some short-term downside with 7,560, that initial upside target. But from where we initially saw that reversal, I think you should be looking at trailing that stop loss to close above at least that 7,660 mark. Now moving over to some commodities, starting off with Brent crude oil. Now, again, another range-bound trading environment. So we're looking at trading between levels. We've got a short-term range within a range. We had a nice little bullish reversal off that 80.40 support level. We traded straight back to that 83.25 level. It looks fairly narrow, but it's still 3, 4, 5% odd moves. We are consolidating there. For me, because I have a bit of a bullish longer-term view on Brent crude, or the view that anytime we get close to that 80 mark or below 80, I think there are mechanisms in place to try to stabilize that price. I'm not really in favor of looking at short positions on crude. So for me, looking for a long position on a bullish reversal off that 80.40 level, alternatively on a break above that 83.25 level. I do have a target there of 86.50 if we do start getting through the short-term resistance. But for now, short-term range within a broader range, I think the price is still conforming to that range. Just for me, I'm still, because of a bit of fundamental influence, I think quite happy to keep a long bias to trade. So looking for an upside breakout or bullish reversals of support for long entry on crude. Gold has been a bit of a trickier one, and we can see very correlated to, inversely correlated to the dollar. We also do have this bit of a flag type formation. Now, the broader, longer term picture for gold is a range bound price environment. It is in a trading between levels at this point in time. Last we saw was a bullish reversal of that $1,990 per ounce mark, and we had a nice little rally up. But that rally, not really large-bodied candles, and it does look like a bearish flag formation. We look at this flag; it's a function of that preceding move down, just that short-term trend within that broader consolidation. I don't think this pattern is actually that relevant anymore. It's very similar to what we saw on the dollar and the euro dollar. Because we've actually moved into a bit sideways consolidation now. And I do think that obviously, if you're looking at directional move in the short term, it's going to be a possible catalyst is the inflation data that's out a little bit later. And for me, just looking at this short-term range, if we're desperate to get in, I'm personally not happy with it sitting in the middle of a broader range for entry, but if we must look for entry opportunity, I think looking for just a bit of a breakout of the short-term range. We can assume that range being a 2023 odd through to about 2040 mark. Obviously, 2040 being resistance. So for upside, looking for an upside break of that 2040 mark. For downside move, looking for a break below that 2023 support level. A break above on the upside, target to move towards $2,060 per ounce, and then just a move below that short-term range would target the next level of support at about $2,010 per barrel. No, dollars per ounce, sorry. Okay, platinum, another range-bound trading environment. There's quite a few of these. It's really about identifying the market. Are we in a trending or range-bound price environment? This commodity obviously sitting in a range-bound price environment at this point in time. Trading between the levels has been working out quite nicely over the last little bit. We are currently testing support there of that 875 mark. Now, what I'd like to see for long entries, just see this candle going green, seeing it close above that preceding red candle, and then we start targeting a move back up. And I think we've got resistance here at about 910 to 915 as an initial target. And if we do get that strong sort of reversal there, we could look at a close below that 875 as a stop loss indication. Now, because that's, we are watching that level, that reversal hasn't taken place. Obviously, there's a lot more trade to go on during the course of the day. And so we could even get a downside breakout. Now, if we do get a downside breakout, for me, I use a closing price as a settling price. And so if we see the price closing below that, let's consider a downside breakout and instead start targeting move back to the lower level of support at 840. Could add a level in there between at about 863 odd, just round it off to about 860 on a move below there. But we really have to see how the price of platinum treats this level of 875 right now. It's time to bounce or break. All right, that's all the charts from me. Sean Murison, Senior Market Analyst at IG South Africa. And thank you very much for watching. Feels uncomfortable there. I feel like I had my normal. Yeah. Yeah. And that sort of thing does happen. I forgot all about beat the streets though. I'm gonna do that as well now. Cool. I'm gonna try move into an office space here, because that's not live, so it's fine. It's easier. Sorry, say that again?